Cannes looking at the wrong thing, and they're looking at the impact of AI on the human creativity, and they should be looking at the impact on media planning and buying. Well, yes, it started as it's become more like CES, and CES has become more like Cannes. It's all Michael Cassin's fault, if you know who Michael Cassin is. I mean, he almost single-handedly made CES into Cannes, or brought agencies to CES, and the reverse side too. No, just more realistic. As I said, I think Cannes is looking at the wrong thing. They're looking at the impact on human creativity, and because AI improves the general level of creativity, but because people have access to the same tools, the danger is it's like being a kid in school with his homework. The teacher knows who uses LLMs and who doesn't. And it may well be that the need for differentiation is greater. James Quincy, who's the chairman now of Coca-Cola, was the CEO, said on a call I was on about a year or so ago, if everybody's personalizing at scale, how do you differentiate? And that's dead right. The big issue, however, is when do machines become more powerful than people? And if that's the case, now there are people here in Cannes who are saying, I didn't hear Demis Sabis of Google DeepMind at the session, but a well-known journalist said to me that he said machines will become more powerful than people. Eric Schmidt has said the same thing on TikTok. I think he gave it a 3-year run, and that must have been about a year ago. So if that happens, it's much more dangerous territory. But until that happens, or if it doesn't happen, human creativity is the deciding factor. So put that to one side. The real issue for the advertising industry is media planning and buying and the impact of technology on that. Well, it turns out it's not media fragmentation. I think that's nonsense. It's media concentration. So 1.2 trillion is the ad revenues for the industry, 900 billion digital, growing like Topsy, up 15, 20%, and the 300 billion going backwards. So David Ellison starts with Paramount, Viacom, and then Warner Brothers Discovery. John Wren and Omnicom acquire IP. They call it a merger, but it's an acquisition of IPG. Why do they do that? 3 becomes 1 in the case of the studios, 2 becomes 1 in the case of the agency. Why do they do that? Because that 300 billion is going backwards. If you don't have live sport, you're down in free-to-air by, let's say, 10 or 15%. If you do have live sport, 0 to 5%. On the other side, as I said, digital's growing at 15, 20%. And the digital structure is very concentrated. Google's 300 billion, Meta's 200 billion, these are ad revenues. Amazon's about 75 billion, going to 100 billion. And TikTok outside China is about 40 billion. So 4 platforms account for more than half the market and more than 2/3 of digital. So to say there's fragmentation is a nonsense. And then those hyperscalers are cementing their positioning with CapEx. The Goldman are forecasting, I think, $5 trillion, and analysts told me last night that $5 trillion was an underestimate. The 4 largest hyperscalers, Microsoft, Alphabet, Amazon, and Meta, are going to spend $5 trillion between 2025 and 2030 on CapEx. So they're cementing in their positions. And so my view is the market will become even more concentrated. So what we have to do as agencies is get closer to the platforms. And we're validators for the algorithm. It probably actually means it's easier. When CMOs say no and it's so difficult, it probably gets a little bit easier on the media front. For brands and CMOs, they have to pick, if I'm right about the upper funnel creative and strategic issue, around human creativity being the deciding factor, that's an important choice. And on the second is an interesting question, and clients are going to have to become totally focused on transparency. So all this nonsense about audit reports on trade desks from Publicis or from Omnicom will disappear because we'll go to a transparent model. And proprietary trading procurement will know precisely through programs like Open Secura, which is Trade Desk's program and probably irritated Publicis in the first place. Open Secura gives them an understanding of what the profitability is on proprietary trading. So I think what you're going to see is a totally transparent model. When I was running WPP, the head of media of what is now WPP Media, or what we call Group M, was Erwin Gottlieb, and he used to say, we are transparently untransparent. Now we're going to have to be transparently transparent. Or Tom Triscari, who's a good observer of these things, says radically transparent, like they talk about in the equity industry and in Bridgewater, Ray Dalio's Bridgewater. Well, it's shifting online. I mean, when we started S4 8 years ago, digital was 50%. I already said it's 75%, and by 2030 it'll be 80%. So, and then it'll go on to 85, 90%. I mean, it'll virtually become all digital. Everything. I mean, it's actually, to be fair, it's quite difficult to figure out what is what. But I gave you the numbers, and if you say Google and Meta and Amazon and TikTok, and then you throw in Alibaba and Tencent, that's it. Now, in media, there will be more consolidation, particularly in that 300 billion that's going south. In agencies, it's going to be interesting. Dentsu want to sell their international business, or tried to. WPP, who've got 3.3 billion pounds of debt, so they're going to have to sell. They'll have to sell their interest in Kantar, which is probably worth $1 billion. They have to sell Burson, which they've already announced. My information is that Burson, which is Burson and Hill and Knowlton, is about $800 million of revenue and $75 million of EBITDA, but going backwards, down about 7 or 8% from last year. If that's the case, they'll only get about $500 million for it. They tried to apparently to pre-sell Burson to Edelman, and Edelman said no, but you could ask Richard Edelman whether that's true or not. So you put those two together, that's at $1.5 billion, call it 1.2 billion pounds, reduces debt from 3.3 billion to 2.1, but that means Cindy Rose are going to have to fire a lot of people. I mean, my advice to Cindy is, instead of focusing on her compensation, what she should have done is reduce the compensation of the executive committee in America on the basis of lack of performance. It's, well, obviously, given the war, it's on hold. When it's interesting, when the war started, obviously, activity dampened down. With the ceasefire, it stimulated. We've had another bumpy period, and hopefully we'll get some resolution. Do I think that resolution is a firm, long-term resolution? No. I think the three big geopolitical problems, US-China relationships, Russia, and Iran, are long-term problems which are very difficult, if not impossible, to solve, and that we will continue to live in a fragmented world. So the lesson for brands and companies is pick your geographies. Because growth is going to be slightly slower, inflation more stubborn, and interest rates as a result higher than we were used to, you have to be super efficient. Now, it's interesting, in this week, I haven't heard anybody, and I've not heard everybody speak, I haven't heard anybody talk about quantum. Maybe Demis did talk about it in his Google session. I didn't see or hear it. But if we think AI is disrupting our industry, which it is, stand by for quantum. America, Latin America, the Middle East, and APAC. I'm nervous about Africa because it's too volatile, and I'm really depressed by Europe. Being an Englishman or from the UK, we have huge problems. 7 prime ministers in 10 years or whatever it is. France also has a big election coming up, which is important, the presidential election. Germany should be, it has the least debt, debt running about 65% of GDP, so it has the most wiggle room from a fiscal point of view. And funny enough, what we used to call the pigs, Portugal, Italy, Greece, and Spain, are doing better. So Southern Europe is doing better than Northern Europe, at least at the moment. But the general picture in Europe is Eastern Europe is interesting. I mean, despite the war, Poland does well. Poland borders on Russia, and that makes it life a little bit difficult because, as I said before, I think Putin and Russia as a problem continues. Be brave. I mean, I think it's in an uncertain world. I think AI transformation is key. I mean, was what I said. Pick your geographies. Actually, I think the CMOs are lucky because they're operating in a region which has vast energy resources and so is well breached for the AI revolution and quantum and blockchain and all that stuff. But what we find is that transformation is really only taking place where there's an existential threat. So EVs, Chinese EVs and AVs are driving fossil fuel manufacturers to be more aggressive on transformation. Fintech platforms like Nubank or Revolut are driving financial services businesses to be more aggressive. And packaged goods we're seeing a little bit because prices were increased during COVID and after COVID, and there's consumer resistance now. And the supply chains have been disrupted by Trump's tariffs, by the geopolitical stuff that we've been talking about, and that means that their margins come under pressure, so efficiency becomes more important. So I think I would say to CMOs, unfortunately, AI is about workflow and simplifying workflow and making sure you have the best workflow, layering technology on top of it, and then managing change management. And people don't change, unfortunately, unless there are existential threats. I was very interesting. I was with another company, with AWS. We did a round table with several CMOs, and one was a chief transformation officer was there from a company outside the verticals I mentioned, and he said that the reason they had taken on transformation at such a huge scale, and they'd done a very good job, it's a $6 billion company, was because they had an existential threat. In other words, human beings, if it ain't broke, don't fix it. So people don't change when they have the ability to change. They only change when they're forced to change.